Welcome to this exam review from Birdsy, your AI-powered study partner. Be sure to like and subscribe for more videos, and don't miss what's happening in the lower corner of the screen. It could be just the thing you need to pass your exam. Let's get started.
Let's start with a review of the foundations of risk. Definition of risk and classes: pure versus speculative. What is the primary difference between pure risk and speculative risk? Is it A, pure risk involves only loss or no change, while speculative risk involves both loss and gain? B, pure risk involves both loss and gain, while speculative risk involves only loss or no change? C, both pure and speculative risks involve only the possibility of loss? Or D, neither pure nor speculative risks involve the possibility of gain? The answer is A. Pure risk involves only loss or no change, while speculative risk involves both loss and gain. Pure risk involves situations that can result only in a loss or no change, while speculative risk involves the possibility of both loss and gain. Which of the following is an example of speculative risk? Is it A, a house fire? B, natural disasters? C, investing in the stock market? Or D, theft of personal property? The answer is C, investing in the stock market. Investing in the stock market is speculative because it involves the potential for both financial gain and loss.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which type of risk is typically insurable by insurance companies? Is it A, speculative risk? B, pure risk? C, both pure and speculative risks? Or D, neither pure nor speculative risks? The answer is B, pure risk. Insurance companies typically insure pure risks because they involve only the potential for loss, not gain. A company is considering launching a new product line. What type of risk does this decision involve? Is it A, pure risk? B, operational risk? C, financial risk? Or D, speculative risk? The answer is D, speculative risk. Launching a new product line involves speculative risk because it can result in either a financial gain or loss. Why might an insurance company be hesitant to insure a speculative risk? Is it A, because speculative risks are predictable and manageable? B, because speculative risks involve potential gains, not just losses? C, because speculative risks are always illegal? Or D, because speculative risks are always related to natural disasters? The answer is B, because speculative risks involve potential gains, not just losses. Why this question may seem a bit tricky: speculative risks involve potential gains, which insurance is not designed to cover, unlike pure risks that only involve potential losses. What is a characteristic of pure risk? Is it A, it involves only the possibility of loss or no change? B, it involves the possibility of gain or loss? C, it is typically uninsurable? Or D, it is primarily associated with investment decisions? The answer is A, it involves only the possibility of loss or no change. Pure risk involves situations that can only result in a loss or no change. There is no opportunity for financial gain, unlike speculative risk. Which type of risk is associated with gambling? Is it A, pure risk? B, speculative risk? C, operational risk? Or D, systematic risk? The answer is B, speculative risk. Gambling is a classic example of speculative risk where there is a chance of either gaining or losing money. Which of the following is an example of pure risk? Is it A, investing in stocks, B, starting a new business, C, a house fire, or D, playing the lottery? The answer is C, a house fire. Pure risk examples include events like natural disasters where only loss or no change is possible. A homeowner is concerned about potential damage from a hurricane. What type of risk is this? Is it A, speculative risk, B, financial risk, C, operational risk, or D, pure risk? The answer is D, pure risk. This is a pure risk because it involves the possibility of loss or no change, but not gain. Why might a business expansion be considered a speculative risk? Is it A, it involves the possibility of both gain and loss, B, it is always insurable, C, it only involves potential loss, or D, it is related to natural disasters? The answer is A, it involves the possibility of both gain and loss. Why this question may seem a bit tricky. Business expansion can be confused with operational risk, but it involves potential gain or loss, characteristic of speculative risk.
Finding this exam review helpful? If you haven't already, like and subscribe for more videos that'll get you ready to pass.
Methods of handling risk: avoidance, reduction, transfer, retention, sharing. Which method of handling risk involves completely eliminating the possibility of a loss by not engaging in the activity that generates the risk? Is it A, avoidance, B, reduction, C, transfer, or D, retention? The answer is A, avoidance. Risk avoidance involves not participating in activities that could lead to a loss, effectively eliminating the risk altogether. What is the primary purpose of risk transfer? Is it A, to eliminate risk, B, to reduce risk, C, to shift financial responsibility, or D, to share risk? The answer is C, to shift financial responsibility. Risk transfer involves shifting the financial burden of a risk to another party, typically through insurance. Which risk management method involves accepting the risk and its potential consequences? Is it A, avoidance, B, reduction, C, transfer, or D, retention? The answer is D, retention. Risk retention involves accepting the risk and dealing with any resulting consequences, often used when risks are small or unavoidable. A company decides to install fire sprinklers in its warehouse to minimize potential fire damage. Which risk management method is being used? Is it A, avoidance, B, reduction, C, transfer, or D, retention? The answer is B, reduction. Installing fire sprinklers is a form of risk reduction as it minimizes the potential damage from a fire. A group of small businesses forms a cooperative to pool resources and cover potential losses from theft. What risk management method does this represent? Is it A, avoidance, B, reduction, C, transfer, or D, sharing? The answer is D, sharing. Why this question may seem a bit tricky. Sharing risk can be confused with transfer, but sharing involves distributing risk among multiple parties rather than shifting it entirely. Which method of handling risk involves sharing the potential financial impact of a risk among multiple parties? Is it A, avoidance, B, sharing, C, retention, or D, reduction? The answer is B, sharing. Risk sharing involves distributing the financial consequences of a risk among several parties, such as through insurance or pooling resources. A homeowner decides to install a security system to decrease the likelihood of burglary. Which risk management method is being applied? Is it A, avoidance, B, transfer, C, reduction, or D, retention? The answer is C, reduction. Installing a security system is a form of risk reduction, as it aims to decrease the likelihood or impact of a potential loss. Which method of handling risk might seem like a form of risk transfer, but actually involves accepting the risk and its potential consequences? Is it A, avoidance, B, sharing, C, transfer, or D, retention? The answer is D, retention. Why this question may seem a bit tricky. Retention can be confused with transfer because both involve financial considerations, but retention means accepting the risk, not shifting it. Perils, causes of loss. Definition of peril and examples: fire, theft, wind, flood, etc. What is considered a peril in the context of insurance? Is it A, a condition that increases the chance of loss, B, an event that directly causes a loss, C, a policyholder's negligence, or D, a type of insurance coverage? The answer is B, an event that directly causes a loss. A peril is an event or circumstance that can cause a loss, such as fire, theft, or flood. It is the direct cause of loss in an insurance policy. Which of the following is an example of a natural peril? Is it A, flood, B, theft, C, vandalism, or D, negligence? The answer is A, flood. Natural perils are events caused by nature, such as floods, earthquakes, and hurricanes. They are not man-made. In insurance terms, which of the following is classified as a man-made peril? Is it A, hurricane, B, earthquake, C, theft, or D, flood? The answer is C, theft. Man-made perils are caused by human actions, such as theft, vandalism, and arson. A homeowner's property is damaged by a windstorm. Which peril is responsible for the damage? Is it A, fire, B, wind, C, flood, or D, theft? The answer is B, wind. Windstorm is a peril that can cause significant damage to property, and it is often covered under standard homeowners insurance policies. Which of the following is not typically considered a peril in a standard homeowners insurance policy? Is it A, fire, B, wind, C, theft, or D, flood? The answer is D, flood. Why this question may seem a bit tricky. While many assume all natural events are covered, flood is often excluded from standard policies and requires separate coverage. Which of the following is considered a natural peril in insurance terms? Is it A, flood, B, vandalism, C, theft, or D, power outage? The answer is A, flood. Natural perils are events caused by nature, such as floods, earthquakes, and hurricanes. These are typically covered under insurance policies. What is the definition of a peril in the context of insurance? Is it A, a type of insurance policy, B, an event that can cause a loss, C, a method of risk assessment, or D, a clause in an insurance contract? The answer is B, an event that can cause a loss. A peril is an event or circumstance that can cause a loss, such as fire, theft, or natural disasters. A homeowner's roof is damaged by a severe hailstorm. Which peril is responsible for this damage? Is it A, theft, B, fire, C. hail, or D. vandalism? The answer is C. hail. Hailstorms are considered natural perils, which can cause significant damage to property, such as roofs. In an insurance policy, which of the following is least likely to be classified as a peril? Is it A. fire, B. windstorm, C. theft, or D. neglect? The answer is D. neglect. Why this question may seem a bit tricky. The term peril refers to specific causes of loss. While neglect can lead to loss, it is typically not classified as a peril, but rather a condition that can exacerbate perils.
Finding this helpful? Hit like and subscribe so you'll be the first to see new exam prep videos on the topics you need to master, all with Birdsy, your AI-powered study partner.
Named perils versus open all-risk peril coverage. What is the primary difference between named perils coverage and open perils coverage? Is it A. named perils cover specific risks listed, open perils cover all except exclusions? B. named perils cover all risks, open perils cover specific exclusions? C. named perils and open perils are identical in coverage? Or D. named perils cover exclusions, open perils cover listed risks? The answer is A. named perils cover specific risks listed, open perils cover all except exclusions. Named perils coverage only protects against perils specifically listed in the policy, while open perils coverage protects against all perils except those explicitly excluded. Which type of insurance policy typically offers broader coverage? Is it A. named perils policy, B. open perils policy, C. both offer the same coverage, or D. neither offers broad coverage? The answer is B. open perils policy. Open perils policies generally offer broader coverage because they cover all risks except those specifically excluded. In a named perils policy, what happens if a peril is not listed? Is it A. it is automatically covered, B. it is covered unless specifically excluded, C. it is not covered, or D. it is covered if it is a common peril? The answer is C. it is not covered. If a peril is not listed in a named perils policy, it is not covered. Coverage is limited to the perils explicitly named. A homeowner's policy lists fire, theft, and vandalism as covered perils. If a flood damages the home, will the policy cover the loss? Is it A. yes, because flood is a common peril, B. yes, because all perils are covered unless excluded, C. no, because flood is excluded, or D. no, because flood is not a listed peril? The answer is D. No, because flood is not a listed peril. Named perils policies only cover perils explicitly listed. Since flood is not listed, it is not covered. If a policyholder assumes all risks are covered unless stated otherwise, which type of policy are they likely misunderstanding? Is it A. open perils policy, B. all-risk policy, C. named perils policy, or D. comprehensive policy? The answer is C. named perils policy. Why this question may seem a bit tricky, the assumption aligns with open perils coverage, but if misunderstood, it could lead to believing named perils offer broader coverage than they do. In an insurance policy, if a peril is not explicitly excluded, is it automatically covered? Is it A. yes, in all types of policies, B. no, only in named perils policies, C. yes, but only for natural disasters, or D. no, it depends on the policy terms? The answer is B. no, only in named perils policies. Why this question may seem a bit tricky, The assumption that all non-excluded perils are covered is incorrect for named perils policies, where only listed perils are covered. Open perils policies cover all except those specifically excluded. Hazards: what increases loss probability? Physical, moral, and morale hazards definitions and examples. What is a physical hazard in the context of insurance? Is it A, tangible conditions increasing loss likelihood? B, intentional acts to cause loss? C, carelessness leading to loss? Or D, economic downturns? The answer is A, tangible conditions increasing loss likelihood. A physical hazard refers to tangible conditions or objects that increase the likelihood of a loss, such as faulty wiring or icy roads. Which of the following best describes a moral hazard? Is it A, a slippery floor? B, filing a false insurance claim? C, neglecting home maintenance? Or D, natural disasters? The answer is B, filing a false insurance claim. A moral hazard involves a policyholder's intentional actions that increase the risk of loss, such as filing a false claim. How does a morale hazard differ from a moral hazard? Is it A, both involve intentional actions? B, both are related to physical conditions? C, morale hazards involve carelessness, not intent? Or D, morale hazards are more severe? The answer is C, morale hazards involve carelessness, not intent. A morale hazard arises from carelessness or indifference, while a moral hazard involves intentional actions to cause a loss. John leaves his car unlocked in a high theft area, believing his insurance will cover any loss. What type of hazard does this represent? Is it A, physical hazard? B, moral hazard? C, peril? Or D, morale hazard? The answer is D, morale hazard. This scenario is a morale hazard as it involves John's carelessness due to reliance on insurance coverage. Which hazard is most likely to increase the probability of loss due to negligence? Is it A, physical hazard? B, moral hazard? C, morale hazard? Or D, peril? The answer is C, morale hazard. Why this question may seem a bit tricky, it requires distinguishing between negligence and intentional actions. Morale hazards are linked to negligence, unlike moral hazards, which involve intent. What is a morale hazard in the context of insurance? Is it A, a careless attitude towards risk due to insurance coverage? B, intentional damage to property for insurance claims? C, physical conditions that increase the chance of loss? Or D, a lack of insurance coverage leading to cautious behavior? The answer is A, a careless attitude towards risk due to insurance coverage. A morale hazard arises from an insured's careless attitude towards risk because they have insurance coverage, leading to a higher probability of loss. Which of the following is an example of a physical hazard? Is it A, a person committing insurance fraud? B, icy roads increasing the chance of accidents? C, a policyholder's indifference to risk? Or D, a person exaggerating a claim? The answer is B, icy roads increasing the chance of accidents. Physical hazards are tangible conditions that increase the likelihood of a loss, such as icy roads or faulty wiring. Sarah frequently leaves her home unlocked because she believes her insurance will cover any theft. What type of hazard does this behavior represent? Is it A, physical hazard? B, moral hazard? C, morale hazard? Or D, legal hazard? The answer is C, morale hazard. Sarah's behavior is a morale hazard because her carelessness is due to the belief that insurance will cover potential losses. Why might a policyholder's indifference to maintaining their property be considered a hazard? Is it A, it is a physical hazard due to potential deterioration? B, it is a moral hazard due to potential fraud? C, it is a legal hazard due to regulatory issues? Or D, it is a morale hazard due to carelessness? The answer is D, it is a morale hazard due to carelessness. Why this question may seem a bit tricky, indifference can be confused with intentional neglect. However, it is a morale hazard because it stems from a lack of concern due to having insurance. Loss, direct versus indirect, and valuation. Direct loss versus indirect loss. What is the primary characteristic that distinguishes a direct loss from an indirect loss? Is it A, direct losses are immediate results of an event? B, indirect losses are always covered by insurance? C, direct losses are always financial? Or D, indirect losses occur before the direct loss? The answer is A, direct losses are immediate results of an event. Direct losses are immediate results of an event, while indirect losses are secondary and occur as a consequence of the direct loss. Which of the following is an example of an indirect loss? Is it A, damage to a building from a storm? Also, damage to a building from a storm? B, theft of inventory? C, loss of rental income due to a fire? Or D, water damage from a burst pipe? The answer is C, loss of rental income due to a fire. Loss of rental income due to a fire is an indirect loss because it results from the direct loss of property. How is a consequential loss typically characterized in insurance terms? Is it A, as a primary loss resulting from an event? B, as a secondary loss resulting from a direct loss? C, as a loss that is always covered by insurance? Or D, as a loss that occurs before the direct loss? The answer is B, as a secondary loss resulting from a direct loss. Consequential losses are secondary and occur as a result of a direct loss, often involving loss of use or income. A business suffers a fire that destroys its warehouse. As a result, it cannot fulfill orders and loses customers. What type of loss is the loss of customers? Is it A, direct loss? B, primary loss? Primary loss. C, covered loss? Or D, indirect loss? The answer is D, indirect loss. The loss of customers is an indirect loss because it is a consequence of the direct loss of the warehouse. If a company experiences a power outage due to a storm leading to spoiled inventory, what type of loss is the spoiled inventory? Is it A, direct loss? B, indirect loss? C, consequential loss? Or D, uninsurable loss? The answer is A, direct loss. Why this question may seem a bit tricky. Spoiled inventory is a direct loss because it is the immediate result of the power outage, not a secondary consequence. Methods of loss valuation: ACV, replacement cost, agreed stated value, salvage. What does ACV stand for in insurance valuation methods? Is it A, actual cash value? B, agreed cash value? C, adjusted cost value? Or D, assessed current value? The answer is A, actual cash value. ACV stands for actual cash value, which is the replacement cost of an item minus depreciation. It reflects the item's current market value. Which valuation method involves a predetermined amount agreed upon by the insurer and the insured? Is it A, actual cash value? B, replacement cost? C. Agreed value. Or D. Salvage value. The answer is C. Agreed value. Agreed value is a valuation method where the insurer and insured agree on a specific amount for the insured item, regardless of its actual cash value at the time of loss. A homeowner's policy covers a roof under replacement cost. After a storm, the roof is damaged. What will the insurance company likely pay for? Is it A, the depreciated value of the roof, B, the full cost to replace the roof, C, the agreed value of the roof, or D, the salvage value of the roof materials? The answer is B, the full cost to replace the roof. Replacement cost coverage means the insurer will pay to replace the roof without deducting for depreciation, ensuring the homeowner can restore the roof to its original condition. Which method of loss valuation typically results in the lowest payout for a damaged item? Is it A, replacement cost, B, agreed value, C, actual cash value, or D, salvage value? The answer is C, actual cash value. Why this question may seem a bit tricky, the term lowest payout might lead one to think of salvage value, but ACV often results in lower payouts due to depreciation deductions. Interrelationships and application. How hazards increase the chance of perils causing loss, risk interaction. How does a physical hazard increase the likelihood of a peril causing a loss? Is it A, by directly increasing the chance of a peril occurring, B, by reducing the severity of a potential loss, C, by eliminating the possibility of a peril, or D, by providing insurance coverage? The answer is A, by directly increasing the chance of a peril occurring. Physical hazards, such as faulty wiring, increase the chance of a peril like fire occurring, thereby raising the risk of loss. What role does a moral hazard play in risk interaction? Is it A, it reduces the chance of a peril occurring, B, it increases the likelihood of a loss due to the insured's behavior, C, it provides financial protection against perils, or D, it is unrelated to the insured's actions? The answer is B, it increases the likelihood of a loss due to the insured's behavior. Moral hazards involve behaviors that increase the likelihood of a loss due to the insured's actions or attitudes. A homeowner neglects to repair a leaking roof, which eventually causes water damage. How does this situation illustrate risk interaction? Is it A, the homeowner's insurance policy covers all damages, B, the roof leak is unrelated to the water damage, C, neglecting repairs increases the risk of water damage, or D, water damage is a natural disaster? The answer is C, neglecting repairs increases the risk of water damage. The homeowner's neglect is a physical hazard that increases the likelihood of the peril, water damage, occurring. Why might an insurer be concerned about both physical and moral hazards in a policyholder's profile? Is it A, physical hazards decrease the risk of loss, B, moral hazards provide additional coverage, C, both types of hazards are irrelevant to risk assessment, or D, both increase the likelihood of a peril causing a loss? The answer is D, both increase the likelihood of a peril causing a loss. Why this question may seem a bit tricky, it combines two types of hazards which both increase risk but in different ways, potentially confusing the focus on risk interaction. Scenario: identify peril, hazard, loss type in given facts. What is the primary difference between a peril and a hazard in insurance terms? Is it A, a peril is a risk, while a hazard is a type of insurance, B, a peril is the cause of a loss, while a hazard increases the chance of a peril, C, a hazard is the cause of a loss, while a peril increases the chance of a hazard, or D, A peril and a hazard are interchangeable terms in insurance. The answer is B. A peril is the cause of a loss, while a hazard increases the chance of peril. A peril is the cause of a loss, such as fire or theft, while a hazard increases the likelihood of a peril occurring. Which of the following is considered a moral hazard in insurance? Is it A, being less careful with property because it is insured? B, living in a flood-prone area? C, a building's faulty wiring? Or D, a hurricane hitting a coastal area? The answer is A, being less careful with property because it is insured. Moral hazard involves a change in behavior due to insurance coverage, such as being less careful because of having insurance. In insurance, what type of loss is theft considered? Is it A, indirect loss? B, consequential loss? C, direct loss? Or D, liability loss? The answer is C, direct loss. Theft is considered a direct loss because it results in the immediate loss of property. In insurance, what is the term for a condition that increases the likelihood of a loss occurring? Is it A, peril? B, loss? C, hazard? Or D, risk? The answer is C, hazard. A hazard is a condition that increases the likelihood of a loss occurring. It can be physical, moral, or morale in nature. A factory installs a new sprinkler system to reduce fire risk. What type of hazard does this address? Is it A, moral hazard? B, peril? C, indirect hazard? Or D, physical hazard? The answer is D, physical hazard. Why this question may seem a bit tricky. The sprinkler system reduces a physical hazard, which is the potential for fire damage. In insurance, what is the term for an event that can cause a financial loss? Is it A, peril? B, hazard? C, risk? Or D, exposure? The answer is A, peril. A peril is an event that can cause a financial loss, such as a fire or theft. It is distinct from a hazard, which increases the likelihood of a peril occurring. Which of the following is an example of a physical hazard in insurance? Is it A, fraudulent claims? B, icy roads? C, carelessness? Or D, inflation? The answer is B, icy roads. A physical hazard is a tangible condition that increases the likelihood of a peril, such as icy roads increasing the risk of accidents. What type of loss does a fire causing damage to a building represent? Is it A, indirect loss? B, consequential loss? C, direct loss? Or D, financial loss? The answer is C, direct loss. A fire causing damage to a building is a direct loss, as it results from a peril directly affecting the insured property. A driver frequently speeds and ignores traffic signals, leading to an accident. What type of hazard does this behavior represent? Is it A, physical hazard? B, morale hazard? C, moral hazard? Or D, peril? The answer is B, morale hazard. This scenario describes a morale hazard, where the driver's careless behavior increases the likelihood of an accident. In an insurance context, which term best describes the potential for loss due to an uncertain event? Is it A, peril? B, hazard? C, loss? Or D, risk? The answer is D, risk. Why this question may seem a bit tricky. The term risk is often confused with peril and hazard, but it specifically refers to the potential for loss, not the event or condition causing it.
Thanks for watching. If you found this exam review helpful, be sure to subscribe for more real-world practice and topic-focused study videos. And visit Birdsy.ai to start your free trial of Birdsy, your AI-powered study partner.